Hi everyone. Good afternoon and happy midweek to all. Thank you for joining us here today at day 3 of the STACS Showcase. I hope you're enjoying the action-packed week so far with the series of panel sessions brought to you at the Showcase. The theme for today is Asset and Wealth Management. So I'd like to welcome you to this panel session where we explore more about post-trades processing and automation on distributed ledger, a new way of working. I'm Kimberly, Strategy and Business Development Manager of STACS, and I'll be your moderator for today. I'm absolutely honored today to be joined by two speakers who bring with them many years of experience in the financial industry. As we will get to hear from them later, firsthand their recounts of what's going on in the post-trades processing landscape, as well as some of the latest trends of technological adoption, especially blockchain. So without further ado, let me introduce them. We first have Danielle, Gerace, Senior Vice President, Head of Market Advocacy and Innovation Research, APAC at Northern Trust. And we also have David Ng, Chief Operating Officer at CSOP Asset Management. David and Danielle, welcome. Thank you for joining with us today. So I'll now pass the time over to the speakers for you to give a brief introduction of yourselves. And in no particular order, since Danielle, you're on my left, maybe we could start with you.
Yep. Hi, everyone, and thank you for your time today. My role really within Northern Trust is to look at the impact of emerging technologies like blockchain and artificial intelligence and how we design future business and client operating models. So it's a very exciting region to be active in this space in Asia Pacific.
Thank you. Thanks, Danielle. And David, over to you.
Hi, everyone. This is David Ng, Chief Operating Officer of CSOP Asset Management. So at the firm, a couple of things I look after, the trading operations and risk management, as well as ETF strategy for the firm as well. On top of that, I also run the digital transformation initiative for the entire firm. So I'm very pleased to be here today. Thank you.
Cool. Thank you, Danielle, and thank you, David. So before we jump right into the topic for today, just a note to the audience. If you have any questions at all throughout the session, please just feel free to drop them at the Q&A tab on your right, and we'll get them across to our speakers towards the end of the session. All right, so straight to the topic of today. Well, as we look at the past couple of recent years, especially in 2020 with the COVID-19 pandemic, we all know that it was a year out of the norm for everyone. And in particular, for the financial industry, it was a record-breaking year with extremely high trading volumes and spikes in volatility. So according to this report by Deloitte, market volumes actually spiked in 2020 with the average daily volume of, if we're just talking about futures and options contracts, it increased from 7.6 million in 2019 to 10.3 million in 2020. And that alone is an increase of about 36%, furthering the stress on post-trades processing operations. So, just to set the scene right, and I want to first throw this question to David, in your opinion, and of course, from what you've seen across the entire industry, what were some of the key challenges in the area of post-trades processing that institutions were generally facing in general, and also, during this highly volatile period? And of course, if you could throw in some specific examples here and there, it would be great.
Yeah, sure. Thanks, Kim. I guess as you alluded to earlier, we have seen record volumes during this pandemic in 2020. And frankly, for us, it's been great for the business. But at the same time, it has also introduced a lot of operational stress to our investment management workflows, operation workflows to cope with the increased volumes. So if you think about the numbers that you just shared, where there was 36% increase on the futures and options side, I think across the industry, that's been generally experienced by investment managers, and for us in particular CSOP, we have a lot of futures-based products, and we have seen record volumes. And the thing is, with regards to settlement processes, it's important to fund managers like ourselves in particular when we do our daily balancings or ETFs, because the thing is, the settlement cycles impact the cash projection cycles for investment managers without an accurate picture of cash projections in a timely manner. We can't obviously get to our investment decisions in a timely manner, and that could be obviously very detrimental to the fund. So I think what the thing is, these operational stresses that we have experienced obviously let us think about what can we do to obviously shorten that trade processing cycle, right? And the thing is, what we realized that obviously the entire financial settlement system's been built on layers and layers and layers of intermediaries, right, providing that trust services, leading to that time delays. And in times of operational stresses, high volumes, we realize we can't cope, we can't react. And then what's that going to happen? Operational errors, trading errors, and these are actually costly to investment managers and in the end, the investors as well. So I think these are some key challenges that we've seen, and I think probably it's time that we rethink about how we should be looking at this piece of the puzzle for us.
Yep, definitely. I think what you mentioned there about about the layers and layers of intermediaries, this problem has been there in the financial industry for, I believe, more than 50 years. It's been an entrenched problem, and it was probably only magnified because of this entire spike in trading volumes during the COVID-19 pandemic. So, given the urgency of the problem that David has mentioned, turning this to Danielle, how pertinent is it for institutions, from banks to asset managers? How important is it for them to tackle these challenges? And how do you think it would impact or affect businesses if it's left unaddressed?
Yeah, I certainly think there was a deep focus on operational resilience amongst asset managers. We sort of focus on areas like, continuity of service as a major provider of custody services, fund administration, and capital market services to asset owners and asset managers. It's important to be able to provide resilient and consistent services. I think things like follow the sun and global operating models and geographical scale were really important through the COVID period to ensure a consistency in delivery of service, both when staff are in the office and out of the office. I think it's really tested the model and improved that operational resiliency of major service providers. I also think we saw a third wave of outsourcing. It really forced asset managers in particular to really focus on where their value add was. And we saw sort of amongst mid-sized investment managers a third wave of outsourcing towards execution services and trading services that are automated and deliver scale into global markets, which then enabled them to really bring that focus and value to the front side of their investment decision making, which is critical in volatile market spaces. There remains a persistent and residual friction within trade processing, and this removing that and encouraging straight through processing and removing that friction, whether that be exceptions and reconciliation or workflow management, is really important. And I think the volumes really exacerbated that need to focus on that. I sort of also think it post-COVID as well accelerated some of the gaps we had in digitisation, where we're still seeing non-digital friction points in the investment lifecycle and trade processing. And that's really, whether that be sort of wet signatures in proxy voting or physical presence in AGMs and decision making. We saw a lot of markets moving towards an accelerated push into pure digital, which is going to help with those volumes and flows and removing some of those friction points from the post-trade life cycle.
Yeah, definitely. I think increasingly straight-through processing is something that a lot of banks and asset managers are placing a lot of focus on. And in fact, like what you mentioned, for asset managers to focus on their core competencies, they're reevaluating their strategies in terms of operations. So now then, this question is open to both of you. What are some of the recent trends in this post-trades processing space you've seen in the recent years in terms of strategies?
Yeah.
This is open to both of you.
David, do you want to start or?
Yeah, sure. Just to draw some of the obviously practical experiences that we obviously experience at CSOP Asset Management, and I think what Danielle said earlier about outsourcing as a key pillar of the strategy in terms of coping with some of that post trade processing work to outsourcing providers or service providers for asset managers. But I'm looking at more from a digital disruption perspective. I think we have seen exchanges or central clearing counterparties coming into the mix. Utilizing new technologies such as blockchain to basically to redesign their settlement cycles. I think there are a couple of Asian exchanges. I think Asia probably in the pilot scheme of actually changing the post-trade settlement cycles, leveraging on blockchain technologies to allow for real-time synchronous processing of trades once it's executed, right? What used to be probably a fad in the last 2-3 years, I think it's getting traction. I think what's going to happen in the next 3 to 5 years is that we will have a practical implementation of some of these trade processing cycles that's going to be disrupted, and so far in the design itself, what I've seen is obviously a radical shift of the roles in the ecosystem, where a typical trade processing lifecycle would be follow a very sequential basis, regardless of the level of use of technology. But blockchain drastically changes that, obviously, with everyone getting access to a public ledger where it's visible in terms of the transaction that's being made, that validates that transaction. I think that's powerful. That's disruptive, because that will elevate, at least from my perspective as an investment manager, in terms of the waiting cycle that I need to make sure that my trade is fully settled and validated. And I think it's just going to allow that shift of resources for all players in that ecosystem into value-added activities such as breakthrough solving, exceptions management, rather than spending a lot of time trying to reconcile or wait around for information to come because of the sequential processing nature of trades. So that's why I see that landscape was in the past and how it's going to change in the next few years.
Yeah, absolutely. I think you did bring up very pertinent points about the benefits of blockchain, and I would like to actually dive a little bit deeper into that in a bit. But before that, maybe over to you, Danielle. Anything to add from your perspective?
Well, definitely, I think in that trend towards, in the last 3 to 5 years, that trend towards digitization. And I think as well as blockchain, we're seeing a lot in the AI space and document processing. And I might bring an alternate view here, which is, we often think about public markets, but there's a great deal of work still to be done within our private and alternative market spaces where there isn't the level of infrastructure and maturity around straight through processing. So we've seen a bit of an emergence around, document processing capabilities that can handle, structured and unstructured data. Increasingly, we handle a lot of non-standard document and processes in the alternative space. And as we're seeing both, mature technologies like OCR or optical character recognition, right through to natural language processing capable of identifying unstructured data, that's really going to support the ability to convert this information into standard data that can then enable those digital workflows and data analytics and decision-making capabilities for these asset classes. So bring in a greater straight-through processing and efficiency in lifecycle management. That's managing the legacy of what we have in terms of let's think about it, analog assets and processing. But you still have that element of distributed ledger technology, of course, which is going to go to what we call digital at source, creating digital asset behaviours and characteristics at the creation of the asset, market infrastructures that can enable the distribution of that information across counterparties really efficiently. And what I like in particular about the enablement of DLT is that ability to have assets that self-execute and self-govern. And I think some interesting in the life cycle management here, what we now think about as post-trade compliance will come more into the live, real-time or pre-trade even, whether that is regulatory compliance and or investment mandate compliance. So it really enables us to think very differently about asset lifecycle management when we're using distributed ledgers and when that's coupled with smart contracts as well. So I think we're going to see a lot more efficiency in our trade life cycles and particularly in that post-trade space as well.
Thank you, Daniel. I think I really like what you mentioned about, having different types of technology there solving for different things, such as OCR for unstandardized data, putting them into structured data, and how we have many different technology in the ecosystem coming together to solve different pain points in the industry. So now we've for the first part of this session, established the problem that we've seen within the post-trades processing space, talked about some of the inefficiencies and manual touch points in the whole landscape, as well as the far-reaching impacts of, leaving this problem as it is, like what both of you have pointed out. So I want to understand, now this question is again open to both David and Daniel, what kind of steps specific to your organizations, Northern Trust and CSOP, what kind of steps have your organizations taken to address some of these issues that we've identified regarding the challenges in the post-trades processing space?
I'm happy to start. So Northern Trust recognised the emergence of the technology as well as the increasing need to accelerate digitalisation. And we established a dedicated group, which is my team, which is the global team. We have a global counterparts here, but market advocacy and innovation research. And it's really around a commitment to innovation that is solving client problems and looking really around that accuracy and efficiency of asset servicing. We do this through collaboration with clients and our core businesses, and we're looking at early stage research and innovation incubation. So that looks like research on tech capabilities, establishing relationships with fintechs, really understanding what's out there in the marketplace. We can look at buy, build or partner opportunities to really accelerate into some of these opportunities. And then we will also incubate these into minimum viable products where we're live with client activity using this technology. And then it's all about that journey and strategic optionality into the future evolution for our business. We're seeing this at all levels, the emergence of new digital assets, David spoke about it, the enablement of major market infrastructures using distributed ledger as part of post-trade efficiency, the Hong Kong Exchange synapse and the ASX use cases. And we're making strategic recommendations around these opportunities to really understand what it means to be able to deliver value into that post-trade lifecycle management, whether that's through your existing operating model or leveraging operating models that are fit for purpose in terms of what the technology can do. We keep an active eye on the emergence of new digital assets and crypto, of course, and decentralized finance. We're seeing increasing institutional interest in this space. So we've taken steps on two fronts. One is about advocacy, which is bringing our voice to industry and regulatory bodies and industry associations to support really the acceptance of the technology and remove barriers to the adoption of the technology. A lot of this is about global consistency with regulation and ensuring we can enable this technology within our business processes. But we've also looked to build institutional grade capabilities to handle the custody and lifecycle management of some of these new and emerging crypto assets through our investment in Zodia, which is an institutional grade custody solution. I think I'd just add to that, which is it's important when we're looking at these new digital capabilities, not to recreate the legacy of what we had, but to really work through the whole asset life cycle. So that really means looking at going upstream and downstream as well from where you sit in the asset life cycle. Because I think if we really want to improve, we've got to think around different operating models, and that is really around evolving the value you continue to add as these ecosystems and assets evolve more and more into a digital landscape.
Definitely. I think that exactly is what definitely innovation is about, right? Not only just replicating existing processes, but rather to reimagine the whole thing from step 1 to step 10. Do you really need all of these steps? Can we eliminate some of these steps and shorten it to just 3 steps? Yeah, and that really would be the start of something completely revolutionary. So over to you, David.
I think for us at CSOP, I think what you mentioned earlier, Kimberly, I mean, where we think about post-trade processing in particular, we are not thinking about automation or just applying technology to it. So I think in that aspect, what we have tried to endeavor to do, obviously, is to work with partners, and it's like what Danielle has mentioned with regards to central market infrastructure, our service providers, as well as our competitors, our peers in the investment management space, to participate in disruptive projects. I mean, leveraging and obviously engaging regulators to get them to buy in, to create a sandbox for us to actually create a potentially a disruptive ecosystem for us to actually try out new technologies. I mean, I think as an example, I mean, if I were to draw an example of a typical trade processing problem that we face within the firm at CSOP, I mean, in the OTC space, we have taken such an approach. We went with the route of not just trying to improve. We went through the route of trying to actually reimagine the entire trade processing cycle from an investment management perspective. Not even thinking. Not even waiting for in terms of our service providers or partners in the ecosystem. We took the first approach because we wanted to come up with a POC MVP. And eventually convince our partners and players in the ecosystem that this is something that is actually a potential possibility, a minimum viable product for people to participate in. And obviously, we have done that. And the thing is, in particular, we've taken the OTC trade processing cycle. And we hope to actually leverage the use of DLT to actually come up with a POC for obviously the regulators as an example of what is possible within one investment manager. And obviously with CSOP's participation in industry forums and the infrastructure forums at the national level in Singapore, we have also engaged some of our peers in terms of potentially collaborating on such projects as industry effort. To basically increase the adoption of such obviously new technologies in terms of reimagining or disrupting the current trade processing life cycle. Because I think one of the biggest challenges in terms of adoption of technologies has always been the buy-in, the network, and getting people to actually utilize it. And I guess for us at CSOP, we are willing to take the first step at it, actually building up the framework and the actual infrastructure, and to try to have people participate. I think that's the approach we have taken.
Yeah, it's actually really heartening to hear that CSOP is taking the first step and not waiting for other providers or your other players in the ecosystem to do it, especially for such a entrenched problem that's been with the industry for so long. It really can be quite frightening to want to try to start somewhere. So it really is very heartening, especially the point on regulations. I think sometimes technology is ready, but the business and commercial side of things aren't ready. So if this can actually go in parallel such that both the business and tech side can be well aligned on pushing progress in the industry, I think it will really help to push things forward. So we also understand that, and we do see that there are existing providers out there in the industry to help banks, asset managers to deal with these post-trades processes. So if we could be a little bit more specific and right here, in your opinion, to David, what do you think are some of the more urgent or specific gaps that could be further addressed?
Existing providers. Well, I think a lot of technology providers, well, at least the one that I've been exposed to, I think they approach obviously their clients or investment managers with the mindset of pushing a product, meaning that there is a product that is really conceived of, and the thing is, well, to a certain extent, that could well be extended to the entire industry. But in most instances, a lot of the problems faced by investment managers, well, it may be an industry problem, a common problem across investment managers, but there are nuances to it. There has been
definitely.
That's obviously introduced by the institutional infrastructure or legacy that each institution has to face with. So a lot of technology providers or service providers, they come thinking that they have a one-stop solution or to sell to the asset managers. And the thing is, without actually fully comprehending the extent of the problem well, I mean, for example, as a CSOP, I've actually dealt with quite a number of these technology providers across my tenure here. And where we are looking for is, and I think that's a gap that needs to be addressed. I think they need to come in with a mindset that they first need to understand the problem and define the problem before they come up with a solution. And I think a lot of the technology providers right now in the industry, I don't think they are quite equipped in that extent. And I think this could be improved if they come in with a solution-based thinking rather than a product. Then I think they'll go. It will help, obviously, one, for their business, and obviously you will help us address our problems better when we do engage such technology providers to help us with it. And I can understand why, because a lot of these technology providers have invested a lot of money into developing that product.
Yeah.
So creating bespoke solutions for their clients, it's almost obviously it's detrimental to the bottom line. But then again, I guess is it time for them to rethink, for some of them to rethink the business model? Because clearly the rate of change that we're experiencing today in the industry, and obviously with the advent of technology, the cycles are shortening. So the thing is, might be we probably need a more agile business model that's solution based to address some of the needs of financial institutions that we see.
Yeah, I think that's actually very helpful for technology providers out there, understanding the exact needs of asset managers before offering a solution that we think may or may not fit what they need. Danielle, anything to add from your end on that?
Oh, look, I think David has made some really valid points there. I think that idea of a one vertical solution provider, I think, is going to be challenged. I think it will be looking at component delivery of capability and more solutions-based. I think a combination of technologies is going to help enable things like what we call mass customization. So it's no longer bespoke development, but scaled in a way that enables clients to self-direct how they, whether that's drop-down menus, inquiry-based customized abilities to interrogate data, hyper-personalization of the way they consume information. I think we're seeing a nice blend of what we see a lot in the retail world come more and more into the institutional space. So I think it will shorten the development cycle for product or solution providers, and it's going to require a lot more to what David pointed out about solutions-based thinking and collaboration with clients. I think clients are looking to work with solution providers who can understand their problems and push their own boundaries on the way they can deliver those capabilities into their business models.
And I just want to peel the onion a little bit there. You mentioned mass customization, and we talk about wanting to ensure that we come up with a solution that fits the problem. But at the same time, in the industry right now, we see a lot of fragmentation precisely because every banks have their own bespoke systems. Every solution middle office provider or asset management companies could be using their own bespoke solution as well. That's why there's so many fragmentation. How do we strike a balance in such a case? Having a solution that could fit what's required, at the same time not having too much fragmentation of systems in the industry.
Yeah. Well, look, they may well coexist. I suspect you're not going to just bring a new way of working in without having to maintain, I guess, the legacy way of working. I think as more organizations re-architect their core technology stacks that enable them to be more nimble, move towards cloud-enabled technology, data-driven event capture, and more digitally enabled and agile development methodologies, you're going to see that pace of change in the way we service clients through the technology enablement. So component offerings, partnerships with fintechs where we can accelerate capability. So this is again coming back to this: we may not build it all ourselves. We will partner with fintechs that can deliver unique value to clients, and again, you're going to be able to accelerate into some of these capabilities. We've done a lot of that around some of our sort of core investment services for managers, because it's about bringing optionality into our clients rather than saying we've solved it all and everybody's going to buy this one vertical stack that solves everybody's problems.
Great, thank you. And anything to it from Davidson?
No, I absolutely agree with I don't think it's meant to be mutually exclusive. And the thing is, that's exactly what I meant by the solutions-based approach. It's not saying that I'm asking the technology provider to come to my firm and create bespoke solutions for me, but I'm just thinking I need the technology provider to think in terms from the perspective of my firm. What are problems I'm faced with, and the thing is, how can we utilize the technology that your capabilities you're trying to deliver to me better? And there may be parts that they may not fit. And I think what I need is an honest assessment rather than coming to me to tell me that I can do it all. No, I just need to tell you, I think I'm really good at this. I can take this particular piece from you and do it really well. And maybe I have a suggestion that maybe we can rework some of the core technology with other solutions that may not be in the best, may not be part of the core capabilities that the technology service provider can provide. So that's what I meant by a solution-based approach. I wasn't thinking in terms of trying to create more fragments or creating another bespoke system, but that clearly what I need is a technology provider to clearly understand my needs and obviously deliver where they think they can.
Yep. Thank you both. So at this point, I just want to narrow the scope a little bit for our speakers, and let's zoom further into the use of distributed ledger technology, which I believe previously we've spoken a little bit about it, but let's go a little bit deeper. And to Danielle, what are your thoughts around the use of blockchain in the post-trades processing space, and specifically, how do you think it can help to future-proof the industry in this space?
Yeah. So again, I think this goes beyond just post-trade. I think this is when we start looking at DLT solving post-trade problems, we think about the asset lifecycle. Where does it start? What does the asset issuance look like? What would we need to capture at source in a digital format that would enable an efficient post-trade process? We tend to segment data based on the stage of the life cycle at the asset. And I think what you can enable through distributed ledger and smart contracts is, again, embedding of those data and asset behaviours and characteristics. What does that look like? So when we developed a private equity blockchain capability, we looked to the creation of the fund structures and we worked with lawyers around key legal terms. What are some of those key legal terms at the creation of the fund that we could embed within a smart contract that then would enable an ongoing lifecycle management of that asset? What does that look like? For example, with a private equity fund, if I am making a capital call and I have investors that have restrictions, I can embed restrictions within the asset behaviours. So if I'm making a capital call, I can remove investors who have disclosed that they don't want to invest in exclusions such as gambling or tobacco-based industries, for example. So you can manage this through smart contract enablement. Rather than everyone in the life cycle having their own digital or analog version of that information, by capturing that exclusion upfront through legal agreements directly translated into smart contracts, you can enable that efficient workflow process right through from the fund manager right through to the limited partner investors and those service providers acting around that, custodians and fund administrators. Further to that, by involving other participants in that life cycle, like regulators, like lawyers, like accountants who are responsible for auditing assets or life cycles or funds, you're again thinking that whole life cycle. I think it always helps to start thinking about how you disintermediate yourself rather than other people, and try and again evolve the role that you play and how you add value, removing that from your traditional role, but really trying to think how you enable that in the future. And so some of that's going to mean we just change our workflows. We're going to be able to share data immutably between counterparties, less reconciliation. Audit cycles could be real time rather than at the end of the year taking several months to conclude a fund audit. It really changes the whole way we can think about the speed, efficiency and assurance provided around some of these investments for clients. Again, David mentioned this point around moving away from batch-driven and sequential processing more to API data-driven and concurrent workflow management through capturing digital at source and enabling the sharing of that immutably through counterparties. So it really is very powerful. And that's, I think, how we think about future-proofing is roles can be flexible. You can configure roles and responsibilities, but being able to really capture the data upfront and share is really the way you're going to enable DLT to take a foothold in supporting life cycle management, particularly in post-trade, but I think it goes further than that too.
Yep, efficient sharing of information, having data stored immutably on the blockchain and providing this tamper-proof source of data, as well as smart contracts that can help to execute actions automatically. I think those are very key points brought up by you. What about you, David? What do you think are some of the benefits or opportunities that can be created with DLT? I know earlier you did mention some of the key points about concurrent processing, removing sequential processes. Anything else that you'd like to add on this point?
No, I don't think that's a lot more to add to what Danielle has mentioned. I mean, capturing data at source, making sure that from the life cycle of the data, we have an immutable audit trail from the live to the end of it. I think that's going to solve a lot of problems on many different levels. Shorter processing time, shifting of resources on a broader macro level, and obviously access to clean, immutable data integrity that could be used for analytics. That's going to drive even more efficiency and optimization. I mean, the possibilities are endless. And the thing is, it doesn't have to be in a post-trade processing world. In fact, it should start at a point in time of the investment management life cycle.
Yes, that really is actually a very compelling proposition. And actually, with such rapid advancement of blockchain, I think we can all very well agree that technology on its own is really not a barrier for delivering all these solutions to post-trade processing problems, or even beyond that, like what both of you mentioned. And as a result of that, we do see many fintechs across Asia and in fact globally sprouting up to address the inefficiencies and pain points weighing on institutions in this space. I want to throw this question to David. If I were to ask you to rate it on a scale of 1 to 10, where do you think the industry is in terms of the rate of adoption of blockchain? And also, what are some of the considerations in the adoption of blockchain?
Well, it depends on which segment of the industry you're in. I mean, if you're on the banking side, I think I'll rate the banks at or what I call the sell side at 7.5.
Okay.
But on the buy side, I'm not sure we actually even are at the passing mark, because the thing is, like it or not, the banks has been under tremendous. I came from the sell side. I know tremendous regulatory burden and pressure to cope with the increasing business complexity. And also the cost of actually managing the complexity and the regulatory burden of it. So I think they have invested a lot upfront since in the global financial crisis. Asset managers, I guess, had it relatively good for the last decade, and I think recently it's just starting to catch up. So the investment into that space, it's not so. It's not where it should be, but I think that may change.
And what do you think are some of the considerations in terms of adoption of blockchain for maybe the buy side? Because you mentioned we're barely passing the mark. So what would help to push this forward?
Well, I think it's making capital investment upfront in technology is it's tough unless there is that push factor. Obviously, that there is that pull factor of greater efficiency, better data, and shifting our resources from non-value added activities to value added activities. I think these are the considerations that we have. I mean, investment managers, I think they look at the ROI in terms of the capital investment into technology. And the thing is, it will help. Obviously, if there is an ecosystem that is building up, that helps the adoption of any sort of technology. If more people use it, becomes the standard industry protocol like SWIFT, for example, everyone uses it, whether it be buy side, sell side, or the fixed protocol on execution. Everyone knows what that is. So I think it's a matter of adoption by other players in the ecosystem as well, and I think that's where buy side managers will start catching on. I mean, this is a no-brainer. I have to be in part of this ecosystem because my competitors are.
Great, thank you. And to Danielle, if I were to ask you the same question, how would you rate on a scale of 1 to 10? Maybe for the sell side. So David has kindly given a 7.5, but where do you stand on this in terms of the rate of blockchain adoption?
Yeah, from the sell side, I think that's a fair call. I think all the major players are active in distributed ledger technology in some way, shape, or form. They're all committing to both innovation, experimentation, and participation in live market initiatives, whether that be, market infrastructure initiatives, whether that be collateral management and repo activity from major providers, or through startups, connecting to and supporting some of the new and emerging digital assets and market infrastructures that are providing liquidity perhaps to asset classes that perhaps haven't in the past been, highly liquid or electronified. So I think there is a broad base, but it's early stages yet. It's not mass scale. It's not broad based across the entire asset life cycle. So in terms of effort for the right stage of maturity, I think it's a 7 out of 10, but there needs to be ongoing investment, continued research, and an integration into the core service offering for it to be, a 7 out of 10 in 3 to 5 years' time when that technology really reaches a maturity stage.
Definitely. And what do you think are some of the challenges involved in the implementation of this blockchain? If you could share some of your specific experiences from Northern Trust.
Yeah, so Northern Trust, like CSOP, at stages has led innovation and invested in new capability itself because it's the fastest way to accelerate into enablement of DLT. But we also continue to participate in industry consortia because we can't lead all of it. And so it's important to also support industry initiatives that may be leveraging the technology. I think it takes time to build a maturity and technology understanding, and you've got to be active now in building this capability to be ready. The tech changes quite quickly and rapidly, so you really need to be experimenting, developing, building, rebuilding technology to keep a pace and build that capability as a broad base, both across your technology and your business partners and resources. As an institutional provider, for us, really, security and asset safety is key. So everything we're doing has to pass a hurdle rate of, does it meet the institutional grade our clients would expect? Can we keep these assets safe? Can we protect information and the privacy of our clients? And the other thing I'd say, the challenge here is again on that the regulatory consistency is not always there yet across the global jurisdiction. So advocacy, keeping that active foot in industry associations and direct collaboration with policymakers around ensuring there aren't artificial barriers to the adoption of the technology, but also removing barriers that may restrict the servicing or enablement of emerging technologies. That's really important, and we see this specifically in the crypto space or new digital asset space, where regulatory consistency and classification is going to be key to the adoption of these asset classes in an institutional framework.
Yeah, agreed. I think I do see a lot of commonalities in the points that both David and Danielle has brought up in terms of really collaboration within the ecosystem, not only going forward alone, because this whole industry is just very intertwined, where asset managers deal with brokers and custodians, as well as many players along the value chain. So collaboration is key. Willingness to try, willingness to take on innovation, and definitely security and safety, especially because we're dealing with financial institutions as well as confidentiality of client data or investment strategies. So definitely it's a key consideration. Right now at this point, I just want to check if we have any questions from the floor. If anyone in this session has any questions, please just feel free to type in the Q&A tab on the right. All right. So maybe, as we wait for questions to stream in from the audience, I just want to throw this question to both panelists. Anyone can take the question. How would you, well, we talked about the importance of collaboration earlier, right? And how we need the involvement of many players, not only one asset manager or one bank, rather for everyone to collectively push the frontiers of the financial markets. If there is something that you could actually tell to your fellow market participants to join you in this, collaborative innovation, what would it be?
I would sort of say be prepared to openly collaborate. I think it's really important to find partners that are willing to work towards value-adding solutions that really enable the adoption of this technology. And again, we always say be prepared to disintermediate yourself in a way that enables trust to be built with partners, which is, this is not, we all are competitive businesses. We all want to succeed, but that comes through finding the right way to deliver value to clients. And that's how you build that competitive advantage. I still do think collaboration here is key. We will see more in the future, custodians collaborating, common work being enabled through shared development and capability. We used to call it, in the past 10 years ago, it was all about building these massive industry utilities. I think smart contract and DLT technology will enable us to do that in a faster and more efficient and hopefully more cost-effective way. We just have to commit to that collaboration journey to enable the non-value add components of our work to be create utility through the enablement of this technology, to focus then on the value add, which is expertise, the service we add, and the access we provide to our clients is really where you're going to add the value, rather than, you know, the non-value add bulk processing of post-trade lifecycle, if you like.
Yeah, and I think what you mentioned there regarding being prepared to disintermediate is a very new way of thinking. I would think, you know, from the perspectives of banks being offering services to other clients in the industry, you would play the role of intermediaries, right? So hearing this refreshed point of view is actually rather heartening to know that, you know, that's not stopping you from moving towards innovation. And what about you, David? Anything you'd like to say to the market participants to join you in this innovation?
Well, I mean, to my peers, competitors, we don't have to compete on everything. I think, especially with some of the problems that we are facing in an industry, I think it requires collaboration. And I think this is a common problem that's faced by industry. For example, trade processing as an example. And I think there are opportunities to collaborate. So keep an open mind for service providers. I think it's equally important. Whilst there is a potential that they may be disintermediated, like what Naz mentioned, but I think if they keep an open mind, I think that there is possibility for them to reshift their value proposition in the ecosystem. And the thing is, if you not get on the bandwagon early, it's likely you will really be disintermediated. So, yeah.
Thank you. Definitely. I think it really, I guess in the long term for players to really be able to compete and stay competitive and relevant in the long run, it's important for us in the short to medium term to really collaborate and overcome some of the more pressing issues. Yeah. Okay. Maybe also one more question to both of you. What would be your short to medium term vision for the industry? What does a 5 to 10 year horizon look like to you guys in terms of this adoption of distributed ledger technology in this post-trade processing space and beyond?
I mean, since Danielle started first for the last few times, I'm happy to do
Yes,
this
sorry, go
first.
David. Yes, thank you. Always nice to share.
Well, I mean, I don't have a crystal ball what the industry is going to look like, but I do see some big trends that's going to happen, at least from an investment management perspective, for post-trade processing in particular. The proliferation of use of DLT, I think it will only gain traction. And in fact, I don't see it within 5 years, probably within the next 3. And the thing is, what does good look like to me? I think access to information, pertinent information, real time. And that basically will shorten my investment management life cycle or decision making, where investment managers could focus on the value add proposition to investors, which is basically our core activity of investment management. And so that's what good look like to me. No more manual processing, real time information, and auditable trail of information from start to the end.
Yeah, thank you for your crystal ball. So to Danielle.
Yeah. So David made some great points there, and we would sort of echo that. We sort of talked about it in the frame of custody reimagined. How could we think 2030? What will we be doing differently? And we're sort of saying we can see a situation where we'll have moved from a mostly electronic world to a digital world. And in that world, data is going to be key. It's going to be, we even envisage it could be freely available, used as a service, real time, called as and when you need it. We see, the use of DLT being able to create that data once and synchronize it across many firms that should hopefully, where we're leveraging shared systems or distributed databases, to reduce the cost of processing data or storing data. I think we're going to see new market spaces and new asset classes continue to evolve. things perhaps we can't even imagine today as we leverage the technology. You know, we talked a lot about distributed ledger, but embedded in that ability to create digital assets is the ability also to fractionalize and create micro investments. So you could see the democratization of investments and access. That's also going to bring liquidity into a lot of asset classes that have previously been perhaps illiquid. Could, you know, revolutionize fund investment and distribution, for example, as well as the alternative space. So I think you're going to see that acceleration towards access and liquidity in a broader view of the asset space. Again, I think we'll also potentially see, we've talked a lot about the asset side, but not much about the currency side. In the same way that assets are evolving from the life cycle, I think the use of digital currencies will be commonplace in 10 years' time. We already see within Asia a lot of our central banks doing heavy research and practical application in the use of central bank digital currencies. So maybe even within 5 years, we'll see the digitization of currencies that could enable whole changes to the way we trade and manage the life cycle and execution of assets on digital exchanges. I think there will be, though, a continued coexistence. Not all markets can evolve at the same pace. The larger, typically the slower. So but you will see a bit of a shift towards digital native, digital first enablement of issuance, and then a slow progression and switching towards these digital as we prove out the scale and efficiency of the digital model to deliver value through to investors and service providers in the value chain.
Yeah, and it's really interesting to imagine what will really happen over the course of the next 5 to 10 years. Maybe like what you said, you know, real time DVP settlement of securities and real time exchange of data, like what David mentioned. At this point, we actually do have a question from the audience from Trev Wesley. He asked, "Can you please elaborate on how real time auditing as opposed to end of year auditing can be achieved with this technology?" And by this technology, I believe he means blockchain. Difficult to implement or onboard?
Yeah, so we had a very specific use case here with private equity, and we were able, in the same way, if you have a distributed database and everyone has a permissioned view of the data that they're, you know, enabled to see, that can be shared with an auditor. So an auditor of a fund, instead of waiting till the year end and looking at the books and records, can build tools and capabilities to be triggered by an event on the blockchain. It can then validate that event on a real-time basis and perform its audit checks based to original source contracts or its own basis of accounting. And we were able to participate with 2 large accounting firms in a real world example of auditing, performing audit checks real time on the blockchain. So again, I think it totally reinvents the way we think about audit services. If it's about assurance, with digital enablement, you can get, to David's point, real-time access to this data and real-time performance of these services, so that when you get to year-end cycle, you'll still do your formal close off and, you know, accounting sign off on your, you know, P&L and balance sheet, but the life cycle of that will reduce from potentially months to weeks because you've had an active program of digital engagement and assurance processes through the years. So we have proved that out, and big firms are investing today in being able to enable digital audit services.
Yeah, I believe essentially, you know, it's really about being able to use a permissioned ledger to allow who will actually get access to the data that is on this single source of truth that is housed on a blockchain. It could really be anyone whom we're dealing with, from lawyers to auditors to regulators, and these kind of security settings could be applied on the blockchain depending on you know who you'd like to provide that view to. So we hope that answered your question, Wesley. And all right, I think we don't have any more questions. And in fact, I think time is quickly running out, and we are coming to the end of our session. We've been benefiting a lot from hearing from our speakers today. But before we officially end today's session, I just want to pass this remaining time to our speakers to share with us any words of any parting words of advice or hope that you'd like to leave the audience with.
Well, I mean, change has always been a constant, and what COVID-19 has taught us, it's only going to accelerate.
Mm, mm. Yeah,
Thank
definitely.
you for
I agree with David. And I just think there's a really positive momentum in the industry at the moment to collaborate and share insights. And I've seen a really open market interface around sharing thoughts around enablement of this technology. So I'd just say don't be afraid to reach out to your industry contacts and partners to talk about these topics, because the more we all share, the more we can advance our understanding and enablement of the technology and innovation.
Definitely. I think really my key takeaway from both of you today is collaboration is key, even though we all like to remain competitive, but
Yeah.
for the industry to collectively move forward, we all need to put that aside at the moment and overcome some of the more pressing issues right now. All right. Thank you once again, David and Daniel. It's really great to have the opportunity to understand your perspectives and learn from your experience. And to the audience, thank you for being here with us today. If you wish to explore deeper into this topic, please feel free to connect with any of our speakers or the STACS team using the People tab on the top right. We'd be happy to speak further. And if you have not caught our demo on post-trades processing earlier today, you can always catch a replay of it on our platform. All right, so thank you all for your time, and be sure to stay tuned for the remaining sessions of the week. Thank you and stay safe.
Thank you.
Thank you, Kimberly. Thank you,
All
David.
right, thank you
Thank
both.
you.
Thank you. Bye.